Good afternoon, everyone. Thank you, Crystal, very much for that introduction. So as Crystal mentioned, I'm Michaela. I'm the audit partner on this, the Saik'uz First Nation audit for the last 3 years. I want to thank Chief and Counsel and the finance team for having me here and allowing me to present today in your community. So I am going to talk finances and numbers, but please, I'm open for questions if you need any clarifications on anything. So I'm going to go through what we do as KPMG, and then I'll go through the numbers at a higher level with you, and we have some time for questions at the end. So as Crystal mentioned, we are an external auditor. That means that we are independent of the nation. That means that we've done our risk checks to make sure that we are not related or influenced in any way by those charged with governance and by management to make sure that we can provide an unbiased opinion. So what we do, we go through and make sure that there's no material misstatements. So all the hard work that Crystal and her team does, we go through and do some random sampling. We talk to third parties to confirm revenues, make sure that the amounts that are recorded in the bank accounts are true, and we've confirmed with third parties to ensure that those assets are there and that those liabilities are owed. Another piece of what we do is we do help Crystal and her team prepare financial statements, and so I'm just presenting a subset of those here today. And the full set of financial statements are available and will be available online and at your nation's office later once they are fully signed and approved by KPMG. So KPMG does or will be issuing an independent opinion. It'll be a clean opinion this year again, so that means that we have not materially found any misstatements in the financial statements, and so our opinion is not impacted in any way by that. And that's what every member and your finance team and your chief and counsel want to hear, is that you have a clean opinion on your financials. So I'm going to dig into the numbers a little bit here, and I'll try to explain this as I go, what they all mean. So I'm going to start with what we call the Statement of Consolidated Financial Position. So this is all the assets, all the liabilities at March 31, 2022, which is the fiscal year end of the nation. I'll start with the first line there, cash. So as of March, these are all numbers at March 31st. As of March 31st, 2022, cash, that's all the bank accounts that the nation owns. It was sitting at 16.7 million compared to 9.6 million in the previous year. Now there was an increase of over $7 million in the cash accounts this year, and we'll talk about that shortly, but it's mostly due to a surplus incurred in the year through various additional funding that was received, and you'll see shortly as well where the funding has been coming from. The next line is called accounts receivable. These are amounts that were waiting to be received still from the nation right at March 31st. So these are funders like Carson County Family Services, Indigenous Services Canada, all the amounts that were still owed to the nation that hadn't yet been collected in cash. There was $2.2 million waiting to be received. The nation also has guaranteed investment certificates of 1.8 million set aside, invested with monies for your future and for future plans and projects. There's also an investment that the nation has with their government business entities. Two of the main ones are AGA Contracting and Tinto Forest Products. So the value that the nation has in those entities to date at March 31 is sitting at 4.9 million. And so every year when Tinto or AGA, if they generate revenue, the nation picks up their portion of it. And if they incur a loss, they also record the loss as well. So the investment is at a net impact of 4.9 million. So that value is sitting with those entities today. And there's still, and there's funds in the Ottawa Trust Fund, $978,000, for total financial assets of $26.8 million. So I'm going to flip to the other side, and these are the liabilities right at March 31 that the nation owed. So there's accounts payable and accrued liabilities. These are the bills and invoices that hadn't quite been paid yet at March 31. As well, wages payable, any paychecks that needed to be paid, but for up to March, depending on the cutoff of when the pay was made. There's about $219,000 of wages and vacation pay, all included in this accounts payable and accrued liabilities balance of $1.2 million this year. Deferred revenue is sitting at $1.8 million. These are funds that the nation has received but hadn't yet had a chance to spend, or the construction, for example, the Rapid Housing CMHC funds for the houses and the units that you guys are building. There was $1.7 million waiting to be spent at year-end there, and the work has been done subsequent to year-end, but it can't be recorded as revenue until the nation spends the money. So this $1.8 million will be coming into revenue when the projects are executed. And then there's long-term debt, $428,000 on some term loans that were still outstanding and will be repaid over the next 2 years. The nation repaid about $58,000 worth of debt this year. So debt dropped from $486,000 to $428,000. So the total financial liabilities for the year came in at $3.5 million compared to $1.4 million in the previous year. So this slide here, what we did here is we took the financial assets of the nation and we subtracted the financial liabilities of the nation, and the difference is what we call a net financial asset. So that means if the nation cashed in all their money, collected all their receivables, obtained all their investments from their business entities, and went and paid off all their debt, all their bills, the net financial asset is the difference that they would have left over. And so we just did a chart here just to show you since 2018, so we did a 5-year comparative. So in 2018, that net difference was $328,000. By 2020, it had reached by almost $5.5 million. And in 2022, that amount now is at $23.3 million. So these are funds that are sitting invested or in your bank accounts that are waiting for future projects. I know you guys have lots of plans. You heard Chief and Council this morning talking about the amazing things that they've done already, and many services and projects to come in the future. So these are your funds set aside for you and your community into the future. So that number is really important because we don't want it to be a negative. That means that you don't have enough assets to pay your liabilities. And you know, as an auditor and as an accountant, as Crystal will be monitoring that all the time, daily, making sure you have enough funds to be able to pay the bills. But you are at net financial assets of $23 million. So. And the graph just visually shows you there how much growth has happened since 2018. So next I'll talk about your non-financial assets. So these are assets that are harder to convert to cash. They're your buildings and you know, furniture, equipment, computer, everything that you own that is physical in nature and you'd have to put up for sale to earn cash from it. So that balance to date is at $21 million compared to $18.6 million in the previous year. Now this year, as Chief and Council had talked about this morning, there was $2.4 million of additions added to capital assets this year in terms of housing units and value in the homes that they're building. The health center, there was $405,000 also added to asset additions for the work that's being done there. As well, there is a reduction of about $727,000 in this amount, and that's for what we call amortization. It's an accounting term that we also reduce that balance to make sure that we account for wear and tear on all your buildings and to make sure that they don't stay at the same value that you paid for, because it's not a true picture from an accounting perspective. So total non-financial assets, including prepaids, just over 21 million. So next I'll go through the 2022 fiscal year. So this is all the transactions that happened in the year that Crystal and her team diligently record every day. Revenues came in at 19.7 million compared to 17.7 million in the previous year. So I'll talk about on the next slide where the major fundings are coming from. Expenses came in at 11.8 million compared to 10 million the previous year. In terms of investments in your government business entities, this year there was almost $1.1 million added to your surplus from your investments in TAGI and in Tinto. So the total surplus for the year, just over 9 million compared to 10.5 in the previous year. So this slide here just goes through your major funders. We just chopped up that 19 million and showed it in the format of a pie. So as you can see there, Indigenous Services Canada came in at 8.3 million. They provide 42% of your revenue funding. CMHC this year, with all the housing projects that have been happening, they came in and make up 11% of that pie with 2.2 million. Tribal Council, Carson County Tribal Council with the Pathways Forward Agreement this year made up 15% of the pie at 2.8 million. You can see last year it made up about 30% of the revenues at 5.3 million. So this is a big component of why there's significant surpluses the last couple of years. The Pathways Forward's money that's being set aside for your future. And then Carson County Family Services came in at 6% of the pie with 1.1 million. And then we'll look at your expenses, 11.8 million broken out into different departments here. It's quite busy because you guys do have a number of departments, but three of your biggest departments are your administration, education. Education this year was 21%, and social development coming in at 11% of that, the 11 million in expenses. So again, when you take your revenue less your expenses, I had talked about your annual surplus for the year was just over 9 million. I just charted it here for you guys to be able to see the 5-year comparative as well, just to show how you've also grown year over year. So in 2018, you had just over $1 million of surplus. By 2020, the surplus was 3.5 million. And in fiscal 2022, it came in at 9 million. So all these amounts are added and accumulated and totaled, and this year, the total accumulation since the inception of the nation, it has come in at 44.3 million compared to 35.3. Now, I just want to clarify that 44 million isn't free and clear where the nation can spend the funds going into the future, which would be amazing. I know Chief and Council would love that. The accumulated surplus is made up also of the value you have in your physical assets. So if you can see here, invested in your tangible capital assets is 20.6 million already. That's money that's been spent. You've already have the physical structures for them. But you have value, because if you were to sell it, which you don't want to because you need these buildings to provide the services, but so that cash has already been gone and paid for. So that eats up about 47% of that surplus. The Ottawa Trust Funds are, we also have its separate fund of 978,000, a little bit of money in a treaty fund, and then 22.5 million is the operating funds. That's all the departments. Some are in a deficit, some are in a surplus, altogether netted overall showing 22.5 million surplus since inception of the nation. So that was my presentation to you today. I know it's a lot of numbers, and I'm happy to explain anything I mentioned today or any questions overall. Thank you. Thank you.